What happens when a tech giant suddenly falls while another one takes off like a rocket? Well, that's the exact story of today's stock market. Intel collapsed, analog devices skyrocketed, and the S&P 500 was caught in between. Hello and welcome back to Today in Finance. In this video, we're breaking down the day's biggest stock market moves. We'll also talk about why the S&P 500 slipped, why Intel stocks was punished, and how analog devices became the star of the day with its earnings report. We'll also talk about other companies like Medtronic and Bunge, and most importantly, what does this all mean for investors and where could the market go next? So without wasting any time, let's get right into today's video. One of the biggest stories today was Intel. The company's stock dropped 7%, making it the worst performer in the S&P 500. For a company as big as Intel, this was a very large drop. And this drop came after a few reports said that the US government might buy a stake in Intel. At first, it may sound like good news because it means support from the government, right? But investors saw it as a problem. They worried that this would give the government more control over Intel's decisions, and they feared that new shares could be issued, which will definitely lower the value of existing ones. For some time, it raised the question, does Intel need support to survive? Because of all this, investors sold their Intel stocks quickly. Other chip companies like Micron also fell, dropping about 4%. This news definitely spread fear across the entire chip market, and confidence in tech weakened even more. While Intel was falling, analog devices were celebrating. The company reported its third quarter earnings, and the results were better than Wall Street was expecting. Earnings per share came in at $2.05, better than $1.95 that the experts were hoping it would earn. Revenue was $2.88 billion, which was slightly above forecasts and up above 25% as compared to the same time last year. This definitely shows that the company is growing up very fast. Even better, Analog Devices gave a strong forecast for the next quarter. It expects earnings between $2.12 to $2.32 per share and the revenue around $3 billion. These numbers are still higher than what analysts predicted. And this good news pushed up the stock by 6.3%, making Analog Devices the best performer in S&P 500 today. It wasn't just Intel and Analog Devices making headlines. Two other companies also stood out today. Number 1, Medtronic. Medtronic stock rose by about 3.7% today. The company announced it was adding 2 new board members, a move encouraged by activist investor Elliott Management. Investors like this because new leadership often brings fresh ideas, stronger strategy, and better accountability. Analysts even raised their price targets for Medtronic, saying the changes could help the company grow even more effectively. This gave the stock strong momentum, showing how leadership shifts can build confidence in a business. Number 2, Bunge. Bunge, a major player in food and agriculture, gained around 3.1%. The rise was linked to optimism about new biofuel policies and the benefits of its recent purchase of Viterra. The acquisition is expected to make Bunge more efficient and gave it a larger share of the global market. Investors saw this as a sign that Bunge is building long-term strength, especially since food and energy demand usually stay steady even when the economy slows down. As a result, many traders see Bunge as a safer stock to hold in uncertain times. So what do these moves tell us? First, technology stocks are clearly under pressure. Intel's strong fall shows how sensitive the sector is towards government news, trade issues, and inflation worries. But not all tech sector is struggling. Analog Devices showed that when a company delivers strong results and a clear, positive guidance about the future, investors still reward it. At the same time, gains in companies like Medtronic and Bunge shows that investors are looking beyond tech. They're moving money into agriculture, healthcare, and other industries that feel safer and stable during uncertain times. Looking ahead, there are several things investors should keep an eye on. The Federal Reserve's next moves will be very important. If inflation stays high, the FED may keep interest rates higher for longer. Higher interest rates make it more expensive for businesses and consumers to borrow money, and that usually puts extra pressure on fast-growing tech companies that rely on cheap financing. The semiconductor sector will also remain in focus. Intel's struggles and the rumors of government involvement could cause more ups and downs. Investors will be watching closely to see if the US government actually takes stakes in chip makers, and if so, how that might change competition in the industry. A government partnership could mean stability, but it could also create limits on how these companies operate. Earnings season is another big factor. More companies will report their results soon, and these numbers will show how businesses are really doing in this environment of high inflation and global uncertainty. If more companies surprise like Analog Devices, it could boost confidence in the market. But if companies miss expectations like S&P 500 could keep struggling. On top of all this, global factors can't be ignored. Tariffs, supply chain issues, and changes in international trade policy could all affect US companies. This is especially true for technology and agriculture, two sectors that depend heavily on global markets. For investors, this means keeping an eye not just on Wall Street, but also on Washington and global trade headlines. In short, the next few weeks may bring more volatility. But volatility also brings opportunity, especially for those who focus on companies with strong earnings and clear long-term growth potential. Today's stock market was a story of contrast. Intel, a giant in the tech world, stumbled badly. However, Analog Devices, another player in the chip industry, soared. Other companies like Medtronic and Bunch also showed strength. The lesson here is simple. In times of uncertainty, stick with the basics. Companies with solid earnings, good growth, and a clear direction are typically the ones that stand out. The S&P 500 may be down, but there are still many opportunities for smart investors that look beyond the noise. So this is all from my side for today. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. And I'll see you again very shortly with another one. Until next time, take care.